whole idea of big banks and financial institutions wanting you to be actually educated about what your money is doing and how it all works is kind of a ridiculous idea. I mean, them educating you on how to save it properly, invest it properly, like a good little boy and girl that you are, seems a little bit too good to be true. Which made me ask the question, what are these big banks actually doing behind closed doors? And the truth is pretty wild. This is the secret world of banking. While I seek to discover what they're doing behind closed doors, and hopefully by the end of this video, we will also be able to see money in a brand new light, and it might even change the way that you look at money forever. And it might even shed some light on what might be the upcoming extremely dangerous economic collapse that we have in our foreseeable future. Now, the first thing you gotta remember is that when you think about bank account, right, you wanna put your money in a savings account, and what happens? That money goes from maybe like a checking account and goes into a savings account. That money just sits there, right? Well, if you think that, you'd be wrong. The truth is, these financial institutions and big banks, what they're doing with your money while it's sitting idle, or at least you think it's idle, they're actually using that to invest and make themselves richer. What? Huzzah. What are you saying? No way. I, like many of you, probably thought that your money is sitting in a bank account, tucked away, perfectly safe, earning a little bit of interest, and everything's good. But when I learned that the bank was actually using my money, and just like they are using my money, they're using your money and everyone else's money to make themselves wealthier. And knowing that just doesn't sit right with me. It's a win-win for the banks, but risky for us clients. If we have enough money in the bank, and obviously there's FDIC insurance and things like that, but some of that excess money could be at risk. Because if the investments that they're invested into with that money don't actually pan out, the economy crumbles, whatever happens, we could actually lose our savings. But even if that doesn't happen and everything goes just fine and dandy, well, we don't get any share in the profits. And I just don't know how that's fair. But then I learned that the banks were using my money for not just broad investments like the S&P 500 that are considered safer, but actually more risky investments as well, which is, I guess, part of how they pay the interest back to us. But in the meantime, they're earning 20 to 100 times more in the profits of making these investments. These other ventures that I'm talking about is actually in the form of loans to other people who also might just have worse credit and could go bankrupt, essentially raking in the profits on the interest of the loans that they've made with your money. And it's honestly a win-win for the banks, but it can be extremely risky for us consumers, especially after our savings exceed the FDIC insurance. And obviously if the economy falls apart and the big banks aren't there to be saved by the government, which luckily hasn't happened yet, with those circumstances, the FDIC insurance means nothing. So essentially, we would lose our savings. I'm sure you've seen the ads of big banks or credit cards offering you great deals on their credit cards with 0 APR interest or cash back. And I've talked about these on the channel before as well. And have you ever wondered why they do that? Well, it's all part of a little sneaky trick done by the big banks to give to them an interest-free loan. That's because the bank was collecting what's called interchange fees on every purchase that I made with the card. These fees are actually a percentage of the transaction amount, and they're paid by the merchant and not the consumer. But that's just a part of the problem, and I'd probably have to do a whole expose to get down to the nitty and gritty. But still, this should at least help you see why you should be wary of these low or no interest offers from the big banks. They're not doing it out of the goodness of their heart. They're using it to get more money out of you, which is why you should always do your own research and read the fine print. There's a reason why it's smaller to read than everything else. But I know what you might be asking. How could these two things all lead to an economic collapse? Doesn't make sense. Well, here it is. You now know how the big banks take our money, lend it out to others. But that very same thing is actually a really dangerous game to play. And the reason being is because we are playing in a system called fractional reserve banking, or let's just call it FRB for short. And this FRB can actually lead to the collapse of the world economy. What that means is if too many people try to withdraw all their funds all at once, the bank will not have enough to give back. This could lead to what's called a run on the bank, and at the same time potentially cause a financial crisis, unless the government prints more money, which we all know how that story turns out. And because the banking systems are interconnected, if one bank fails, it could have a domino effect and affect the entire economy as a whole. This is actually one of the things things that happened during the Great Depression. And worst of all, it could happen again if we're not careful. But you let me know, keeping your money with the big banks, do you trust them? Do you not? Maybe you have your money in crypto. You let me know down in the comment section below. And if you got value from this video, make sure to like, subscribe, hit the notification bell if you want to be notified when I post a future episode. And I'll catch you guys in the next one. Oh, by the way, I think you'll also enjoy this video as well. Peace out.